Hello, wishing our viewers a very happy and bright morning. And Shriyansi, good morning to you. Of course, it's a weekend, so it's a happy morning also. And the way markets are faring, be it Indian markets or be it US markets, fresh record high again for not just Indian markets, for even US markets. But now, what are the key factors to watch out from here? There is a key inflation reading which has to come from Fed, but a lot of news and action from Indian markets also. How is your trading going to pan out? We'll get you all the action. We'll set you for the trading day. So let's get started with the US markets first. Good news coming.
Absolutely. Well, yes, absolutely. When you take a look at the US markets, what you're looking at is that the Thursday's trading session did end on a strong note, with the three major averages posting gains and the S&P 500 closing at a fresh record high as well. For the third time this week, when you take a look at the Nasdaq Composite, that also notched 4 straight winning days as well, and that is the kind of handover that we saw coming in from that one. Now, a batch of economic data is also something that we're looking at in terms of what else is on our radar. There's initial jobless claims data as well that had fallen more than expected, indicating a stronger labor market as well, while the final reading of second quarter gross domestic product also came in at 3%. That is also something that we're keeping a very close eye on. Now, in terms of the action, in terms of a week-to-date basis, the three major indexes are higher for the week, with the S&P 500 up nearly 0.8%. When you take a look at the 30 stock Dow as well, you're looking at that index being on pace to rise about 0.3%, and Nasdaq Composite on track for a roughly 1.4% week-to-date advance. So that largely is the kind of handover that we're looking at. Yeah.
All right, so the key economic indicator that would shape the way ahead now. There's an inflation reading which has to come from and let's see what key comments come in from Fed officials also. But then let's get you action from other high economic indicator. First, let's get you crude. WTI fell 3%. That's our reason is because there's a potential Saudi output increase. That's what we are eyeing on, and production increases on the hopes of it's of course it's mounting some hopes. Whenever there's a slowdown or a fear of slowdown, that's one sign where oil also starts to react. But here, some respite coming in. Precious metal, if you talk about gold, they are also on a record-breaking rally. Silver is scaling up. In fact, gold is hitting record high every day. But then, yes, more on the crude. Brent crude, if you talk about YTD, it has fallen nearly 7%. It's been consolidating on the lower levels for the longest of the time. But now looks like some respite coming in. Some fears. Market seems to be shrugging off the fear of slowdown also. Talking about the other precious metal. Silver scales 12-year high. It's not just the gold which is glittering high, bright and shine, but it's now the other precious metal which are also catching up. In fact, silver also has been a stellar rally, and now it is at a 12-year high. 36% up it has been till date, YTD, if we talk about. And not just gold and silver. If you talk about other metals also, platinum, which is 2.2% up, palladium is nearly 1%, more than 1% up. So safe haven as well as the raw material appeal, this is what is fueling silver move also. But moving on, let's get you more on what is that the reason that the oil market or maybe the prices in crude is reacting. Let's put that perspective also into place. Let's put the spotlight back on oil, wherein reports suggest that world's top crude exporter, which is Saudi Arabia, is in fact preparing to abandon its unofficial $100 per barrel target as it readies to raise output in a bid to claw back market share. On a divergent note, OPEC has been cutting output to support prices along with allies such as Russia. The prices are down nearly 5% this year, which is amid increasing supply from other producers, especially the United States, as well as weak demand growth in China.
Well, absolutely. And moving on, then let's take a very quick look at the global cues that we're keeping on our radar. Now, firstly, from the US, you do have core PC price index data as well as the personal income and spending data, and that is something that we'll be keeping a very close eye on. Of course, back home, there's NSE indices rejig, and that is something that we'll be watching out for, along with the foreign exchange reserves as well. So that is something that we're also keeping on our radar this morning. And from Japan, there's core CPI data also. So that largely is the kind of handover when it comes to the events that we're keeping on our radar, Priyanka.
Okay, now let's discuss the key indicators in detail. Coming back to US jobless claim, Street has been hawkish on the US labor market reactions. Now, the number of Americans filing new applications for unemployment benefits dropped to a 4-month low last week itself. This suggests that the labour market remains fairly healthy. Jobless claim have fallen by 4,000, which is now the figure stands at 218,000. Remember, macro resilience could make it harder for the Fed to deliver another 50 basis point cut in interest rate, which is now the next meeting is slated in November, as some investors are hoping on this.
Well, absolutely. And speaking of macro resilience, then economic growth in the second quarter accelerated amid strong consumer spending. Gross domestic product for the second quarter was up at an unrevised 3% on an annualized basis. Now, economists had estimated the reading to show annualized growth of 2.9%.
Okay, now let's get you some key comments also. So, keeping it with the global macro picture, US Treasury Secretary Janet Yellen and former Fed Chair Ben Bernanke have indicated their expectation of the US economy largely avoiding a recession. Now, this is a big respite coming in. In fact, in her remark, Yellen continues to allude to inflation progress and labour market resilience, which is responsible for this trend. Meanwhile, Bernanke spoke of a soft landing situation also. That's the best of all possible worlds, with the job market and inflation and even the interest rate back at normal level, but also cautioned Street over the risk of rising unemployment.
Alright, then moving on. Meanwhile, the Chinese central bank has lowered their key 7-day reverse repo rate as part of the bank's larger stimulus boost since the pandemic to support the ailing economy. The PBOC said the rate would be lowered by 20 basis points to 1.50% from 1.70% earlier. Banks detailed the rationale, saying move aims to further strengthen counter-cyclical adjustment of monetary policy and support stable growth of the economy.
Okay, now let's get you some action from the stock market also, from US markets also. After Amazon computer maker Dell has asked its global sales team to start from office 5 days a week starting September 30th. In a memo released for employees, company says the decision has been taken to leverage collaborative environment and grow skills, which requires a team to be present in office.
Alright, then let's keep it going with the tech space, and global tech giant Accenture has delivered robust fourth quarter results. Let's go across to my colleague Anisha Jain, who's standing by with the fine print of these numbers. Anisha?
Yes, what I understand is that the stock has shot up in the pre-market rates, but I wouldn't call it a very healthy set because there are borders of disappointment and slight misses. Having said that, it's a very glass half full, glass half empty kind of situation, because as far as the Q4 earnings is concerned, the company has managed to beat the expectations, both in terms of top line as well as the EPS estimates. The top line this quarter has come at $16.4 billion. The street was working with an estimate of around $16.3 billion thereabouts. Separately, if you look at the internals, consulting business has gone back to growth this time around, which is a big highlight for me, because the last couple of quarters, the consulting revenue was declining a bit. Even if you look at the generative AI order booking, that has been strong at around $1 billion. Last quarter, this number was close to around 900 million. So they have made a bit of an improvement. Though if you compare it with the analyst expectations, for instance, was Morgan Stanley was penciling in, they were hoping for a $1.2 billion kind of bookings coming in from generative AI. The overall bookings have come in healthy at $20.1 billion, and the book-to-bill has actually improved to 1.2 times versus 1.1 times. So as far as the Q4 earnings are concerned, that looks okay. Despite the fact that financial services is a bit muted, healthcare has bounced back very smartly. You also have communications vertical doing okay. And America is what is driving the growth for them. So that's the positive. On the weaker side, however, the guidance is a bit of a miss, but we have to see what the internals really work out to be, because it's in the con call that the company will break down the organic and inorganic portion of growth, and that will be the key highlight for me. For now, they're talking about a growth of 3 to 6% in the coming full year. Part of the street was expecting a 4 to 7% growth. They haven't detailed out much in terms of how the headcount movement has been, but overall it looks like a decent set. Let's see what they have to say on their con call as well. But for now, there's nothing too damaging in terms of numbers and nothing to get the street too excited as well. Healthy set for now.
It's a healthy set of number, we can say. In fact, AI booking, which gave Accenture a boost last quarter, also looks like this worked for this quarter also. In fact, stock closed, Shriyansi, nearly 6% up, and this is one big trigger for the Indian IT stocks also. Now, a couple of brokerage notes have come up after the Accenture earning call. What BofA has to say? BofA said that the earning calls was a clear picture and a clear positive also. In fact, he spoke about, the note speaks about that the guidance is conservative. Well, it should be well received, and client behavior study, new promotion cycle, this looks permanent to the broking house. Now, Macquarie also came up with a note. They spoke about that there is no high-end optimism, which is to be assumed in revenue guidance, booking, both looks encouraging for at least Indian IT companies. And now large transformation programs are far from done and in the early stages of migration to the cloud segment. Jeffrey says it's an inline quarter4. FY25 guidance was with solid bookings. FY25 guidance, in fact, is in line with the expectations. Revenue was a beat. Adjusted EPS was in line with the estimation. So, look like overall, it can be a good day for the Indian IT companies.
Well, absolutely, that's what it looks like, and that's what Brokerage Radar is indicating at this point. But time for a quick breather on the show. When we come back, we'll take a look at how the Asian markets are faring, so don't go anywhere.
Welcome back. You're watching Market Cafe on 80 Now. This is Priyanka Uppal. Now let's take a quick check on Asian market, which looks like strong set of gains coming in, strong cues coming in for Asian market. And this is all on the back of the Chinese central bank, which is taking policy measures to boost their economy. And not just the impact coming on CSI. In fact, Hang Seng also, it's over the moon, I believe. Now, again, it was nearly 3% up today. In fact, yesterday also, what we saw that all the Asian markets, they closed with strong set of gains. More than 2% gains coming on Nikkei, Hang Seng, Kospi, Kosdaq. And now today again. Now, since the People Bank of China, they've cut the 7-day reverse repurchase rate earlier. And they also announced about talking about the, they had deducted that RRR. Now, they have also cut in the 7-day reverse repurchase rate, which they had announced earlier, to 1.7% from 1.5. And now this is what the impact is. This is a second cut in 3 months, and that's what is taking the Chinese economy and even the Hong Kong index higher. Nikkei is also up today. This opened with a strong set of gains today, and all right, it's 0.5% up today. So there was a key indicator which came in from Japanese economy also. Tokyo's inflation rate for September, that eased out to 2.2%. Earlier, it was 2.6%, but the core inflation was in line with the expectation of 2%. So the strong set of economic indicators which are coming from these economy and the measures by the Chinese economy, and remember that's a clear and direct impact on our metal industry, has been taking these indices, these markets also high. Quickly, let's see even the broader markets from these countries, how have they been opened. Nikkei is nearly 1%. We've spoken about Hong Kong, but then talking about topics, that is also up nearly 0.25%. South Korea's Kospi, it is down by nearly 0.1%, minor gains, 0.1%, whereas Kosdaq is also lower with minor gains. So a lot of cues coming in from the global markets also, Shansi.
Well, absolutely, lots of cues to keep an eye on, and as for what the Nifty implied is also indicating, we're looking at a good start coming in. So let's see how that pans out for us. But moving on then, HDFC Ergo, India's leading private sector general insurance company, is bridging the national insurance protection gap through a series of awareness campaigns. One such significant effort is the HDFC Ergo Annual Insurance Awareness Award Junior Quiz. Now, the initiative that began 9 years ago with 8th and 9th class students from 16 schools in a single city has grown to encompass students from 3,200 schools in over 200 locations this year, with a theme in 2024 of broadening boundaries, insurance awareness across Bharat. The quiz received an overwhelming participation of 21% students from government schools and 47% girl students overall, paving the way for equitable financial inclusion. To catch 12 finalists, go head-to-head live at 5 p.m. today on the exciting grand finale of HDFC Ergo Annual Insurance Awareness Award Junior Quiz 2024 in participation with Times Network. Scan the QR code or visit the HDFC Ergo General Insurance YouTube channel.
All right, now let's get you what is in store for the viewers today. An action-packed day coming ahead. At 9:20, we have Vikas Parshad as well as Deepika Munda to get you the FI view from MNG Investments, how Indian markets valuation are they expensive or not, long-term investors bets, what viewers can eye at, and of course, let's not forget FIs. They've already been pouring money, more than 26,000 crore poured in a month till date. So, what is that FI view is shaping up at this point in time? Let's catch it all the action at 9:20. At 9:40, we have PB Fintech's new foray. We have Manas Agrawal, who's a vice president of research for Bernstein, who talks about that why is Street nervous or jittery about the new plans. We saw that stock slumped nearly 7%, but later it recovered and to close with a loss of 2%. But what is making Street nervous? What is the capital allocation policy, valuation check? Everything we discuss at 9:40 with Manas Agrawal. At 9:50, we have Karan Dharani, who's a senior VP for Elara Securities, to talk about the mega Swiggy IPO. So a lot of action coming in from the primary market and what lies ahead in terms of what kind of peer pressure it can put. Zomato stock has been a little nervous ever since this IPO has been filed on via confidential route. So let's see what Karan Dharani has to say. That is at 9:50. At 10 a.m. to catch an action, as we go on our exclusive conversation with RC Barga, who's the chairman for Maruti Suzuki. This is a big boost coming in for the hybrid and the EV vehicles, especially after the Karnataka state government talking about new policy measures to boost hybrid and the EV cars. At 10:10, we have Upasana Bhardwaj, who's a senior economist from Kotak Mahindra Bank, and she talks about that is it the time to go long on bonds, especially when we have H2 borrowing plan in place. And then at 10:20, we have Value Research CEO Dhirendra Kumar to talk about is it a time to even look at debt funds? He'll draw a comparison for us between debt as well as the equity funds. So, power-packed day coming up. Shriyansi, ahead.
Well, absolutely. That's a power-packed lineup for you right there. But with welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates then. And the Finance Ministry has released its economic review for the month of August, which highlights global uncertainty as a challenge to economic growth. But on the positive side, rural demand seems to be getting stronger this fiscal. In fact, Prakash Priyadarshi filed this report earlier. Take a look.
The Finance Ministry has come out with the details of the monthly economic review report for the month of August, where it had mentioned that the fundamentals of the Indian economy are robust and stable. Despite geopolitical challenges, all the indicators are performing well. As per the report, we will likely encounter a cycle of policy rate cuts globally. When it comes to capital expenditure, there's a wider belief that the capital expenditure will pick up going forward in the remaining months of the current financial year. When it comes to farm sector, higher kharif production is already visible. Rural incomes and demand should get stronger, and full inflation will be milder. However, there are some sign of a strain in a certain sector as well. For instance, auto sector, where FADA has reported, moderating sales of passenger vehicles and piling up inventories. Along with that, when it comes to a stock market, the report had mentioned that the stock markets around the world are booming, reinforced by recent policy announcement in a few countries. Consequently, the risk of an eventual correction has risen, and there's a possibility of a spillover effect as well. But the bright spot at this point of time for the Indian economy is, of course, crude price, which is under control and in a range bound for several months.
All right, thanks very much, Prakash, for that update. Moving on, Swiggy has updated its DRHP with SEBI for an IPO that could be worth about 11,000 crore. Major investors like SL and Tencent are set to exit. Well, there are many key buyers in the pre-IPO deals. Sharath is here with all that details on the DRHP and the size of the IPO, which it could be. Sharath, certainly big names coming in with the likes of Amitabh Bachchan, Madhuri Dixit, Karan Johar. Tell us more detail about the IPO size and all.
Well, it's interesting development coming in for Swiggy as they have filed an updated DRHP with SEBI. The amount is almost 3750 crore rupees when it comes to the fresh issue. And if you look at the OFS part, that is coming in at almost 18.5 crore shares. Now, also interestingly, investors like SL, AlphaWave, Elevation, Norwest and even Tencent, they are likely to reduce their share. And interestingly, the OFS component, as per our calculations and the unlisted deals which are happening, range between 6,500 to 7,000 odd crore rupees. And this week itself, we had earlier reported to you that the company would be filing a confidential DRH with SEBI as well. The key shareholders, Prosus, SoftBank, Tencent, Qatar Investment and GIC also make it to the list. And if we compare both Swiggy and Zomato overall, if you look at it, the revenue and the PAT numbers, Zomato is actually profitable as compared to Swiggy. When the average order value, if you look at it, that still comes in at same at almost 428 rupees. Also, let's look at the operational numbers, how both Zomato and Swiggy pan now monthly transacting users, restaurant partners and cities where they are present in. Of course, this is getting skewed towards Zomato because the market share is also higher enjoyed by Zomato in the food delivery segment. The market valuation currently, as per our calculations, though do remember price band is not out yet of a Swiggy, that ranges between 15 to 18 billion, and Zomato on the listed space comes in at roughly $30 billion. Also, quick commerce portion is something to look out for, and over here itself it looks like even Stevens when it comes to the operational numbers for both Zomato and Swiggy, but the revenue part is where Zomato is actually getting a higher percentage, which is its company called Blinkit. Now also the entire unlisted space has been buzzing, especially celebs lapping up and all. These are all unconfirmed reports, but what we are gathering is Amitabh Bachchan, Madhuri Dixit and celebs such as Rahul Dravid, Zahir Khan have also made it to the list and are jumping on the bandwagon of acquiring secondary shares. Now this can be a CCPS or in equity. That's what the channel checks are suggesting, and this list also includes players such as Rohan Bopana and even celebs such as Ashish Chaudhary.
Thanks, Sharath, for that update coming in. So there you have it. That is what is in the cart for Swiggy. Moving on, then the government is considering allowing more PSU NBFCs to issue capital gains bonds under Section 54 EC of the Income Tax Act. Now, sources tell your channel that the renewable sector's financing needs could push the MNRE to seek approvals from the Finance Ministry to include green-focused NBFCs, the likes of IREDA as well. Prakash Priyadarshi filed this report earlier. Take a look.
Yes, we are learning from our sources that the government may allow some more NBFC to issue capital gain bonds covered under IT Act. We are given to understand that the government is likely to include some more PSU NBFCs in the list of companies that can raise funds through capital gain bonds. A very significant development coming in. Sources are informing that the Ministry of New and Renewable Energy may approach Ministry of Finance to include NBFCs operating in renewable energy space. Along with that, IREDA has requested a ministry to allow issuing capital gain bonds covered under 54 EC of the IT Act. That's a very significant development coming in, as you are aware that the NBFCs such as REC, PFC are already issuing capital gain bonds to raise funds. Therefore, industry has also approached government. In fact, industry has also recommended government to launch bonds dedicated to the renewable energy sector in order to meet financing demand. Industry wants green bonds to attract either no interest or 0.1% of interest. That's a very significant development coming in. And considering this, Ministry of New and Renewable Energy is likely to approach Ministry of Finance to meet financing requirement of the renewable energy sector, which is likely to be in a range of around 33 lakh crore by 2030 in order to meet 500 gigawatt renewable energy. Therefore, the Ministry of Renewable Energy is likely to take up this issue with the Ministry of Finance. And out of this 33 lakh crore rupees, 12 lakh crore is likely to be drawn from the NBFC sector. Therefore, relaxed financing norms for the NBFC sector is going to be very crucial to meet financing norms.
All right, thanks very much for that entire wrap on this piece of news, Prakash. Moving on, market regulator Securities and Exchange Board of India, SEBI, has reduced the timeline for the listing of debt securities and non-convertible redeemable preference shares. SEBI said the measure will help faster access to fund for issuers, while investors would secure an early credit and liquidity also. Anjali Palod joins it with more details on this. Anjali, over to you.
SEBI has issued a circular reducing the timeline for the issue of debt securities and non-convertible redeemable preference shares to T plus 3 working days from the existing T plus 6 working days mandate. This step has been taken so that issuers can get access to their funds more quickly and investors to get early credit. Additionally, this will help the public issues of such securities be aligned with private placements, which currently follows a T plus 3 working days timeline. public issuers of debt securities and preference shares can choose to comply with the new timeline on or after 1st November 2024, but it will become mandatory after 1st November 2025. So only for the first year this timeline is voluntary. Companies need to disclose which timeline they will be following in their offer documents. Current regulations say that if a company fails to meet the timelines that they have given, the monies received or blocked will have to be refunded to the investors within 2 working days. Till November 2025, this regulation will become applicable only after T plus 6 working days, even if the company fails to meet the T plus 3 timeline that they have chosen. After November 2025, the refunds will also have to be given in accordance with the T plus 3 working days timeline.
Anjali, thanks very much for this update. Now, moving on, the central government, in fact, in consultation with the Reserve Bank of India, has finalized its borrowing program for the second half of FY25. 6.6 lakh crore has been allocated by the government to centre's borrowing plan, to which even DEA Secretary Ajay Seth said that in order to smoothen repayments of borrowing of the 2 pandemic years, government would make necessary adjustments in dated security borrowing going forward. He also spoke about the T-bill borrowings, which have been moderated considering current holding levels and estimated cash flow. In fact, let's get you those comments from the DEA Secchi also on, Yes Bank's chief economist, Indranil. She also spoke about how the government's borrowing plan would pan out.
Yeah, so definitely, absolutely in lines with what we had expected. In fact, the market had possibly been expecting, on the basis of relatively good growth in the taxes side, that there could be some cuts in the borrowing program. That has not really come out. But compared to the 7.40 trillion that has been raised on a gross basis by the government in the first half of the year, and given that 14.01 trillion was the total gross that was announced in the final budget that was tabled, the balance amount is the total amount that the government is anyways borrowing in the second half. So absolutely in line with expectations, and any sort of change in the borrowing program up or down will possibly be done only in the fourth quarter of the financial year, after there is a better assessment in terms of the tax collections and the expenditures, and after tabling of the supplementary demand for grants.
Well, I think Indranil summarized it very well. This particular set of numbers is a no surprise at this moment. This is kind of pure maths based on the total announcement earlier and what is left. So that way, no surprise. Your question is very valid, and what we have seen over not only this particular budget or just the last budget, but over the last few years, there has been very significant commitment to fiscal discipline. So whenever the government has actually come out with any kind of target, eventually they have either met it, if not, they have overachieved it. So there is no reason to believe that this particular year's numbers will also not be met. Additionally, what the government has done in this particular budget, they have indicated that they will be targeting some kind of a overall debt to GDP number also. I think that is also a very positive development. So overall, it looks like a no surprise set of numbers and reasonably favorable for the overall fixed income space at this moment.
Alright, then there you have it. That's the word coming in from the experts when it comes to the government's borrowing plan. But let's also shift the spotlight then to the auto space. And Jefferies has come out with a note where they're talking about the Indian auto OEMs. They should be reporting September wholesale volumes early next week. And in terms of what they're penciling in, then September registrations are impacted by the earlier timing of the pre-festive inauspicious period or Shraddh for vehicle purchases this year, and that is something that they're highlighting. In terms of what else they're saying, in terms of the OEMs, they're talking about how OEMs are likely to build channel stocks ahead of the festive season, which starts from October 3rd as well. In terms of their expectations then and what they're really penciling in for a whole host of companies, they're expecting September wholesales to also grow 10 to 13% on a year-on-year basis when it comes to Bajaj. And in terms of TVS, and they're also talking about 3 to 6% for M&M as well as Kiro Moto and Maruti. Now, when you take a look at what else they're penciling in, they're talking about how Eicher Motors, Tata Motors and Ashok Leyland can see a decline coming in anywhere between 3 to 8%, and that is something that they're also penciling in terms of the September wholesale volumes. Lastly, let's also take a very quick look at their top auto picks, and TVS Motor as well as M&M make it to that list. So that largely is the kind of handover that we have from Jefferies when it comes to the auto sector then.
Okay, auto sector, which is in top gear, and there's a note which is coming in by Jefferies. We stay for a short break here. More to come on the other side of the break. We would not want to miss, because that sets you up for the trading day.
Welcome back. Thank you so much for staying tuned in. Well, let's get to the list of stocks that you should keep on your radar bright and early this morning. The first one on the list is RITES. And when you take a look at what really is keeping that stock in the news flow, the company is in a consortium emerging as the lowest bidder or L1 in a tender that was floated by the Delhi Metro Rail Corporation, DMRC. The estimated value of the bid is 87 crores, approximately including GST, wherein RITES also has a share of 49%, so that's the one to keep an eye on. And Biocon also is making it to that list. When you take a look at the news flow for Biocon, then partnering with Tabuk Pharmaceuticals to also commercialize its glucagon-like peptide 1 or GLP-1 products in the Middle East region. And Torrent Pharma also makes it to that list because they've refuted the claim of Shellcol 500 allegedly failing CDSCO quality test as well. The sample seized by CDSCO is not manufactured by Torrent and is in fact non-genuine and spurious. That is something that the company had to say. All products manufactured and marketed by Torrent follow good manufacturing practices, and that is the clarification that they also made. Next, let's take a look at RVNL, because that is the one that has inked an MOU with Engineers India Limited or EIL to explore business avenues, identify projects across the globe complementing each other with increased capability for bidding and carrying out infrastructure and other projects as well, facilitate the development as well, and that is largely why we're keeping RVNL in that list as well. When you take a look at what else is making it to that list, you do have Pratap Snacks and Autumn Investment, and Mahi Madhusudan Kela will be acquiring 46.85% stake in Pratap Snacks through execution of a share purchase agreement. Cost of acquisition is 846 crore rupees per share value of 746, which comes at a 29% discount to the current market price then. Now, Autumn Investment will hold 42.31% of equity shares of Pratap Snacks, and the company will become an associate company of Autumn then, and open offer also for up to 26% of the voting share capital at a price of 864 rupees per equity share from the public shareholders, and that is why Pratap Snacks makes it to that list. Lastly, let's take a look at Race EcoChain then. We'll be raising 29 crores via preferential issue, price at 352 rupees per share, 13% discount to the current market price. And when you take a look at the list of participants, include promoter and non-promoter Ganesha Ecosphere as well, and that is why Race EcoChain is also making it to this list.
All right, looks like big names coming in for Pratap Snacks. There's stock to be watched out for surely on this. But a couple of notes on banks today. In fact, Gaurav is joining us. Gaurav, this space especially hasn't moved much. They've not participated much the way other stocks and other spaces have moved. A lot of notes coming on the banks also and other notes. Please tell us what these notes indicate now.
Well, yes. First, let's talk about brokerages which are highlighting the banks. And first, we have is ICICI Bank and HDFC Bank. Now, UBS has now maintained buy rating and hiked the target price for both the banks. For ICICI Bank, they have given a target price of 1575 rupees. What they say is that steady performance will actually help the valuation. And at the same time, when we talk about asset quality, it is relatively better than the other banks. And that is why they are being a little bullish on this counter. When we talk about HDFC, there also they have hiked the target price to 2100 rupees. They say that the loan book rebalancing will actually help the ROS. And at the same time, they are actually expecting NII growth to slow down, but at the same time they are being a little bullish because of the loan book acceleration that we may see in the bank. Apart from that, we also have some pharma sector stocks which are in focus because UBS has now initiated on many of the counters. So we have Sun Pharma and Cipla where they have initiated with buy rating, but at the same time they have initiated with sell rating on Zydus Life, Dr. Reddy's, Aurobindo and Lupin. What they're saying is that the trend is actually weakening in terms of markets in India as well as US. They are actually highlighting that US market, generic market is actually actually declining. In fact, more than 50% of the US branded market is shifting to biologics, and that is the reason why they are being a little bearish on this stock. But at the same time, they say that the strong balance sheet will help the companies to grow even further, and that is why a little bullish view on the two counters that we discussed. Lastly, let's also focus on Marico, because MK has now upgraded the rating to add and also hike the target price, because they say that valuation is actually factoring in the growth, and at the same time we may see improving growth trajectory for the company, and that is why a little bullish stance is coming up on Marico. So definitely watching out on all these counters on the back of the brokerage note that we received today.
Gaurav, so that's the update when it comes to brokerage radar. But while you're with us, let's also take a look at credit card spends for the month of August, where total spends declined on a month-on-month basis as all major players reported a negative growth coming in as well. So tell us a little more about that as well.
Well, yes, when we talk about the credit card spending, we have seen a little bit of slowdown in the month of August. Credit card spending has declined almost by 2.5% in the month of August, which was at a plus of around 8.5% in the last month sequentially. And this is led by all the major players. So when we talk about Axis Bank, ICICI Bank, HDFC Bank, SBI, and even Kotak Mahindra Bank, there we saw some decline in this month. When we talk about growth in volumes of transaction, there also we saw some slowdown that increased almost only by 1.6% versus what it was at 7.2%. But on the other hand, when we talk about net credit card addition, there we saw a little bit of increase, and that was led by almost HDFC Bank, ICICI Bank, Axis Bank, and SBI. When we talk about the overall trend, it seems that all the counters are being a little slowing down their business because of the RBI's risk weights and the other regulatory norms that are required in the unsecured lending. When we talk about market share, we did not see any bank actually losing the market share, but specifically when we talk about SBI Bank's credit card, and if we compare it on a year-on-year basis, there we have seen a little bit of decline in terms of market share. Spends per card, when we talk about this aspect, IndusInd Bank is still leading the pack, and this is followed by HDFC Bank, ICICI Bank, and SBI Bank. Now, when we talk about brokerages, they believe that there are multiple reasons which are contributing to the slowdown in credit growth, and at the same time, they expect this credit growth slowdown to continue because of the regulatory norms as well as the unsecured risk which is rising in the banking segment. So definitely a data point which is worth keeping an eye out on is credit card spending, and we will definitely track this for months ahead as well.
It's a key trigger. That's a key thought to ponder on. Thanks very much, Gaurav, for that details. But let's move on. PB Fintech was in focus yesterday also because they plan to foray into hospital healthcare management system. And now a couple of notes which have come in on this particular developing angle. CLSI, which says clearly this could be an entry barrier for a new entrant, because of course the management has a track record of expanding into asset light businesses only. Though they have an estimate of they still maintain their estimate of 1,000 crore net profit versus the guidance of FY27, but then they do see some challenges here. Morgan Stanley has also expressed their reservation. They've said that key concern of investors if this changes the asset light nature of the business, and it is going to be it can be a premature assumption to make any assessment on the potential financial impact. They've maintained an equal weight rating. Target price they've given is 1375, and they've also spoken about that. BofA has also come up with that. They've maintained a neutral review. They've said target price of 1975, and they said management clarified no decision yet on entry in healthcare, and there's a limited cash burn in past, so management intends to be disciplined. Let's see how these brokerage notes impact the stock today, which was hit both previous two sessions, which we saw that they plummeted nearly 8 to 10%.
Well, absolutely. We'll keep a very close eye on PB Fintech. But with that, we're completely out of time on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Priyanka Uppal, as well as the entire team that put this show together. Thank you so much for tuning in. Don't go anywhere, because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.